Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are Friday, the 19th of August, 2011, the time 3:10 p.m. in the afternoon. You saw the stock market sell off fairly heavy, going right into the close again. And I think I've been vindicated because these breaks, in fact, in the NASDAQ, you're back under that August 11th low, and I said you were going to retest those, and you're getting very close in the other indices. Whether they go through them or not is immaterial. The retest is what I was looking for, and as a technician, that's what took place. Now, the gold market's on fire, as you know. There's just nowhere to go. People are scared of stocks. What are they supposed to do? Go into the treasuries and get 0.13 interest rates or put money into a 2-year note for under 2%? So they're temporarily buying these hard goods, and that's what you're seeing go on. They're also scared that each weekend that goes by, we hear something new that is not good. Our president's on vacation. Our Congress is on vacation. As far as I'm concerned, Merkel, she's on vacation with Sarkozy. If that was a meeting, a summit meeting that was supposed to do something, they're better off staying on vacation. Nobody's biting the bullet. Now, at some point, we're going to hear something. The president, in order to get reelected, probably has to come up with a jobs data report. That's going to be the key. If I'm him, I'm turning my focus right then, right there. Jobs are going to be the key, and we'll see how that does. But as you can see, in the silver market, you came alive today. And whatever the reason, let me back out today. This is the market until today, and that's May, June, July, August, and look at today. Game over. Game match, set, done. You broke out to the upside as far as I'm concerned today. You can see that clear on this chart. You can see that the market's got a pattern now of the higher highs, higher lows. It's just plain kicked in. What do you see? The gold-silver ratio later. You'll see that that did it. And what I think's happening is people are realizing there's more bang for the buck at these prices in the silver, and something else happened. What people did is they didn't worry if silver's the industrial metal today because you didn't go anywhere in the copper. This market did it all on its own finally today, and you can see that you've got a bullish setup. Now, look here where the red line got over the green. That's a crossover of the shortest term average over the longer term one, the 100-day. Now you're starting to get close, and I've mentioned this to you for days on end, that I think that what you're going to see very soon is the 45 get over the 100. Then you're lined up with another crossover. I wouldn't be surprised if we're headed to the $46 mark in the silver. So I want you to get an idea of that. You are over the Bollinger Bands. Now, I've left these lines in here to just give you an idea. I guess I could have lowered that chart a little bit, but what I really am setting up here is the market's over the Bollinger Band. The odds of staying over the black line or under it are 2.5% of the time. So as friendly as I am, do you honestly think I would tell my clients to buy up over that Bollinger Band? No. I thought the market turned bullish at 39.87. I've mentioned that. But your risk, I don't know how else to put it, was $2. That's a big risk to take in the market. It's made it, and that's great, but sometimes you can't handle the risk, and you're overbought. So I'm friendly. I'm a bull looking for a break that one can handle the risk on to tell clients to get long. That's simple. In the gold market, you're hugging the Bollinger Band all the way up. It's classic. It's bullish as can be. You got an embedded stochastic. You've locked in the trend. It'll take the red line getting under 80 to, again, scare me, at least as a technician, away from thinking bullish. In terms of price, see the 1725.80? I predict in a day or two your 18-day average will be at that number or higher, and technicians that are locked out of the market, they're going to zone in on that price. That's what I think is going to happen. The copper market today, as I said, didn't do much. Up 80 cents. It's just laying here. It's going sideways. I mean, it is certainly looking over its shoulder and saying, hey, boys, what about me? Don't you think that there's going to be something good? Unfortunately, Not until we see world economies pick up, or China say it's got more demand, or somebody say things are better, including the U.S., say job growth, that there's something good. And we're not seeing it. If you saw that Philadelphia number, the Fed's numbers, they stink. End of discussion. Stink. If this president thinks that with 9.1% unemployment he's getting reelected, that'll be interesting. That'll be one for the history books. It could happen. But it often doesn't with big unemployment, so I look for him to do the magic, whatever. It's time. In the energy prices, what you're facing here is pretty simple. The market came down because weak economies, and people are questioning, what do you need? Now, the funny part is, if you're watching today's CNBC as I was, diamonds are all over television. They're the good investment again. People use crude. They don't use diamonds. And that is something that I think you've got to think about. I think that when we see the first glimmer of good, I want you to think of crude oil prices up there. Up there. They're not making a lot more of it, and in these terrible times, we're consuming a heck of a lot of it. And the break to 75, well, the rally back to 89, to me at least, says 75's a cheap number. Might be too cheap of a number, and the market pulling back into this 80 zone is looking for maybe what a right number is. Remember what I told you about the gold-silver ratio? This chart is a ratio, and I might want to stand here. When it fell down, just the way that you're seeing, it meant that silver gained on gold. Gold gained back on silver, and I'll flip-flop right here, as this took place. And today, the market is verifying, at least what I said temporarily, that I think you're stuck between a 45 and 40 to 1 gold-silver ratio, and sooner or later, silver's going to start jumping to even drop it a little bit more. That's my thoughts on it, and that's where you're going down. This is all taking place in the face of Venezuela nationalizing its mines, if you will, and taking out of, I think it's Europe, 214 tons of gold they're talking of shipping back into Venezuela. It's not that it's going to come on the market or not, but it's probably less supply we're going to see around for a while. I think that's fairly important. And that didn't do anything to this gold-silver ratio. That's really the point that I'm making. In the note market, I was just on, as I said, with Bill Griffin and Maria Bartiromo, and they were asking me about interest rates on CNBC, and I said, where else is there to go? Do you want to go put your money in Germany? Germany's solid as can be. They've got the monkey on their back. They got those other 17 members that they're sitting there carrying the deal for. Germany on its own, terrific. France on its own's done a heck of a job. The ECB has done a good job just recently of keeping Spanish and Italian interest rates down. But you're a big market player. You want security on your money. You don't want to worry if those banks are solid one day, not the next. All the nonsense that's going on in America, and it is political nonsense of the worst type, the world's still looking at our interest rates and gobbling them up. That's the reality of what's going on. In the natural gas, I liked, not natural rebound gas, I like today's action a lot. Market comes down. First it goes up to the 18-day average, gets thrown back. Now if you clear 277.17, I think the bulls for the first time, can grab control of the market. So I think that's a chart that's interesting. Now we're in the Brent natural, I keep saying natural gas, Brent crude. And here's this market. I think it'll fight at the 110.40 zone. You clear 111.74, and I think we're out of the correction phase. Maybe going into the second part of the year, actually, we're going to see stronger energy prices. But that remains to be seen. It's a weekend. Do yourself a favor. We want you to download our futures trading kit. We want to give you the passcodes to use the charting software. You can't use them without it, but a lot comes through there. Access to recorded webinars we can give you, my twice daily oral and written updates. And I charge for these, and not a fortune, but I charge for them every month. Get a big following on it. Yours free to try it, so you'll see what others are getting. Now, within the kit, we have booklets on cause and effect on money supply. And you better start reading up on all this because that's what's going on. Option strategies are listed in there and explains what they're doing. Everything's a download with brochures and everything else that you want. And then, of course, the charting software, and you get to play if you want with the swing lines and everything else that I'm showing here. How do you get it? 1-866-973-2077. Don't worry if we don't pick up the phone. We're not going to be here Saturday. We're golfing. The reality is, leave your name and number. We'll call you on Monday. It's that simple. Or go to our website, www.iraepstein.com. And do I have any other charts? No, that's pretty much it. So you can see where the markets are finishing. You go have yourselves a good weekend, and I will talk to you all come Monday.